very much. Our last witness is Stephen Capp. Mr. Capp's President and CEO of Laser Age Technology Corporation of Waukegan, Illinois, which I am also honored to represent. Laser Age specializes in custom laser services for diverse material applications. Mr. Capp is testifying on behalf of the National Federation of Independent Business. Welcome, sir. You as well have 5 minutes to present your testimony.
Thank you. Good morning, Chairman Walz, Ranking Member Schrader, and members of the subcommittee. My name is Steve Capp. I am the President and CEO of Laser Age Technology Corporation. I am pleased to be here as a small business owner and member of the National Federation of Business, NFIB, the nation's leading small business advocacy organization, to discuss the impact of federal income taxation on Laser Age. My father and I started Laser Age in 1979. Now we're based in Waukegan, Illinois. When we started Laser Age, we were a tiny contract manufacturer with one laser. Over 32 years, we've added 135 employees and 65 lasers. We specialize in laser processing and materials for the medical device industry, but we also work with the electronics, LED, aerospace, and other industries. Currently, we export about 50% of the product that we manufacture. Like many small business owners, taxes are a major concern for us. In fact, 4 of the top 10 issues in the latest NFIB Problems and Priorities survey are tax issues, particularly tax rates and complexity. Small business owners are encouraged that Congress is considering tax reform, but reform must recognize the issues impacting small businesses and pass-throughs. First, I want to discuss why a business like mine chose a pass-through entity. An owner chooses a pass-through or business structure for a variety of reasons, generally because of liability protection or tax efficiency. Laser Age is a pass-through business, an S corporation. Not unlike a lot of closely owned businesses, we were originally organized as a C corp. Ending the double taxation of our profits and gains as a C corp was our primary reason for converting into an S corp. Simply put, double taxation of our shareholders' profits, gains made their investment in our company less attractive. Frequently, business sales of closely held businesses are structured as asset sales, unlike sales of public companies, which are usually stock sales. As a C corp, an asset sale would first be taxed at the corporate level, and then a second time when the after-tax proceeds are distributed to the shareholders. As an S corp, in an asset sale, the sale only faces one layer of taxation at the shareholder level. Obviously, this single layer of tax makes the investment in our company more attractive. While the conversion adds complexity, this was a good decision for our company, and we urge that the S corporation pass-through structure continue to be supported by Congress. Second, as a pass-through business, individual tax rates are especially important. As an S corporation, we pay tax on our business income at the individual level. Keeping these rates low is important to keeping my company competitive. Over the last few years, my company's operating costs have increased steadily. My company has been getting strong pressure from some of our largest customers to begin production in a low-cost country. To this point, we have successfully resisted taking that action by remaining price competitive without resorting to leaving the United States, primarily by adopting what is known as lean manufacturing techniques and improving the efficiency of our production methods. But there are limits to what productivity enhancements can accomplish, and we anticipate that at some point we will have to establish some offshore production capacity or lose very significant customers. If federal tax rates increase, that will simply add to the pressure on us to move some of our manufacturing offshore. For this reason, mindful that all of the current individual income tax rates set to expire at the end of this year, I encourage Congress to keep tax rates low for all small business owners. Third, tax reform must recognize the issue impacting pass-throughs in small businesses. Much of the debate surrounding tax reform is focused on eliminating deductions and closing loopholes to reduce taxes. If that is the path for tax reform, Congress should keep some basic principles in mind pertaining to, first, tax rate, second, encouraging capital investment, and third, reducing complexity and compliance costs. First, rates must be kept similar to pass-throughs and C corps. The current tax rate for pass-throughs are similar to C corps. If the rates were to go down for C corps but remain unchanged or go up for my S corp, it would put Laser Age at a distinct disadvantage. Second, tax policy do affect capital investments. Let me explain. As a manufacturer, I operate a capital-intensive business. Last year, we purchased $1.1 million in capital equipment, and this year we will purchase another $850,000 of equipment. We were able to use accelerated depreciation for these costs, and it absolutely influenced our capital investment program. We simply could not have afforded these level of capital investments without these benefits. In addition, as a manufacturer, we rely on Section 199 domestic production deductions. Losing these deductions and credits without corresponding relief will also place our company at a disadvantage. Finally, one simple step that Congress can take is to simplify the tax code and make permanent expiring provisions. Last year, LaserAge's income tax return, technically an information return, was 416 pages long. Apart from costing an enormous amount of internal accounting personnel time and efforts, LaserAge was forced to pay an outside auditing firm $9,100 in professional fees to prepare the tax filing. My own return, which includes my share of LaserAge's S Corporation taxable income, was 28 pages and cost me $2,500 to prepare. We should not have to spend so much time and incur so much expense for tax compliance. It isn't good for us, it isn't good for the economy, and it isn't good for Uncle Sam. In conclusion, tax reform can be an effective tool for economic growth, but must include small business and pass-throughs. The majority of private sector employees, 54%, work for pass-through businesses. Small businesses in particular account for a vast majority of new jobs. The Congress has the opportunity to reform our complicated tax code, but you must make sure to do it right. Tax reform must add the concerns of both pass-throughs and corporate businesses. Thank you for this opportunity to appear before this committee on these important issues, and I look forward to any questions. Thank you.